Are these options going for 320 being sold or are they being bought? In this video, we are going to reveal a secret method on how to determine that. Because you'll see here, 9:47, the 6-second mark, all of these are the same expiration date and they're same strike, 100 call strikes, but they're colored red and also green. And so we made a video about this before. We talked about it. And we said that the colors don't necessarily mean that they're being sold or they're being bought. And that you have to understand the market structure and that the colors represent the bid ask. It's being transacted currently. It's red because, for example, it's being done at the bid price here. And when it's being done at the ask price here, it's going to be colored green. And so we said that the colors originally don't necessarily mean anything. However, there is an exception, and that is where the secret lies. Okay, so if you didn't watch our video on what the colors mean, that will give you some context to it all. We'll put that video at the top. If you have info cards turned on, we will put that also up here and also at the end of this video. We are using Garmin as the example. GRMN has just reported earnings, and so it has a slight rally. And so let's dive deep and answer that question on what that secret method is for the exception on how the colors could actually tell us if it is a sell or a buy. So as we start to scan this options tape here, we'll see here we're currently at the 6-second mark. As we go down and start moving along, now we are at the 7-second mark here. You see the transition from 6 seconds to 7 seconds. Now we're going into the 7 seconds. And as you see that we are now in the 7 seconds, you'll see here at this here, pay attention to this here. You see here, this market has now gone to 320, and 320, the bid ask is now essentially zero. There is no spread, no width. So this is telling us a secret way of using the colors, because now you have the same 320 being transacted at that price. However, it is red. Why isn't it green? Even though we are at the 320 bid ask, it could have been green, like here, right? However, it shifted the colors to red. And this is when that exception of what the colors can tell us can apply, is that this is a sell at, and it's being done because of this market structure being at zero. So this is the only exception when we can use the colors to determine a buy or a sell, is when the market has gone to zero in the bid ask spreads. So always look at this market bid ask, and if it is zero, then you can use the colors as a way to determine, was this transaction done as a sell order or a buy order. Okay, you'll see here as we go down more, the market then starts to shift again, right? And so it turns green because now it's being executed at the ask. So people could get confused and think this is buying when in fact it's selling. And the market has just shifted off of that bid ask, that tight bid ask, that zero mark here where there was a potential arbitrage opportunity. Okay, and so we also took on this position. You'll see here. We also sold the 100 strike calls. You'll see here our position is here. There was at least 1,000 contracts today at the volume. Very little open interest at 34, so we know these are opening orders. Okay, and if you don't want to sell a call without because that could be expose you to risk by selling a call naked. You could also do what we also did. We bought another call at 95 strikes. You'll see that here because their extrinsic value here is only about 1.98 currently, and we would like to sell a higher extrinsic value. See here, so we're not actually paying the cost of the option, because as you know, options are priced based on the extrinsic value. Well, the actual cost of it is the extrinsic value. So we're not actually paying for that option cost. And so this trade is actually, we can actually show you what it looks like, because it's actually also bullish in a way where if it goes up, it's still going to be profitable. You'll see that we're always above that zero line where the profit loss is here, all the way up till this. So this is our break even point where it starts to go below that on the price here. So anything below that will be a loss on this price. So what is that price? 97 point, about 97.5 you'll see here. So our break even at 97.5. So this price at currently 102 can still drop all the way to 97.5 and it would still be profitable. And we like this trade because you'll see here it can rally if it wants, or it can come back down, and if it comes back down it could come all the way to 97.5, which is about here, right? And this price range is actually a support level right here. So we like that, how our break even is right around at that 97.5. Also here is another support. This one is a stronger support because it gapped up from here. So we like this break even, and this is why we took on this trade. And so this is one way you could trade unusual option activity. I hope you learned something. So please smash that like button. Helps our channel grow so we can make more videos, so everyone can learn more about using unusual options activity for your trading strategy. Okay, subscribe if you haven't, and hit the bell icon and you will be notified whenever we see unusual options. Take care, everybody.